Qatar just detonated a 40% gas surge. Not 5%, not 10, 40. This isn't a market shift, it's a tidal wave crashing straight into America's energy dream. For years, US leaders bragged about energy independence, promising jobs, power, and cheap bills for ordinary families. But in one move, Qatar has undercut that story, flooding the world with LNG and pulling the floor out from under US exports. The first victims? American workers, American wallets, and America's claim to global dominance. And the real shock? This is just the beginning. Let's break this down. Liquefied natural gas, LNG, is the invisible weapon of the 21st century energy war. You don't see it, you don't smell it, but it powers homes, fuels industries, and decides which nations rise and which nations fall. And right now, Qatar, a tiny desert state with just 3 million people, is using LNG to pull off one of the most aggressive global plays we've ever seen. Here's the headline fact. Between 2025 and 2028, global LNG supply is set to rise by 40%. That's the biggest surge in history. And who's leading the charge? Qatar. Already the world's largest LNG exporter, it's doubling down, pumping billions into expansion projects, building megatrains of gas production, and locking in long-term supply deals with Asia and Europe. The result? A flood of LNG that is reshaping the world map of energy. Why does this matter for the US? Because America built its recent economic story around one promise: energy dominance. Remember the headlines? The shale revolution, America, a net exporter of gas, energy independence for the first time in decades. It wasn't just numbers, it was jobs in Texas and Pennsylvania. It was billions in export revenues. It was political bragging rights in Washington. But energy dominance is fragile. It only works if the world needs your gas and if your rivals don't undercut you. That's exactly what Qatar is doing. Let's rewind. In the 2010s, US shale gas exploded. Fracking technology unlocked massive reserves. Terminals that once imported LNG were flipped into export hubs. By the early 2020s, the US became the largest LNG exporter in the world. For a moment, it looked unstoppable.
Washington told Americans, "We control our destiny now. No more dependence on the Middle East, no more begging OPEC." The world seemed to believe it too. Europe turned to US LNG after Russia invaded Ukraine, paying premium prices to keep the lights on. Billions flowed into American companies. Small towns along the Gulf Coast boomed with jobs. But here's the contradiction. US LNG was expensive. It depended on high global demand and limited competition. And while America was celebrating, Qatar was quietly laying the groundwork to blow up the party. Qatar has three weapons: scale, cost, and timing. Scale. Qatar sits on the world's largest gas field, the North Field, which it shares with Iran. It's practically endless. By expanding production, Qatar can pump out LNG at a level the US can't match. Cost. Qatar's gas is cheaper to produce and ship. It doesn't need to frack, it doesn't face the same labor costs or environmental fights America does. That means it can sell LNG at a lower price and still make huge profits. And timing. While America was chasing short-term profits, Qatar spent years signing long-term contracts with Asian giants like China, India, South Korea, and Japan. These are the customers that will decide who rules LNG for the next 3 decades. Now, as Qatar's 40% surge hits the market, US LNG faces a brutal reality. It's the higher cost option, and in a price war, the high-cost producer bleeds first. So what happens when 40% more LNG floods the market? Prices drop, margins collapse, and contracts shift, and the first to feel it? US workers. Because LNG terminals in Louisiana, Texas, and along the Gulf Coast are expensive to run. If global buyers can get cheaper gas from Qatar, why stick with American suppliers? Already, reports are showing Asian utilities signing 27-year deals with Qatar, deals that lock in billions of dollars of future demand. That's money that could have gone to American companies, to American jobs. And it's not just the companies. Lower export revenues mean lower tax receipts, fewer investments, and ripple effects across local economies. Think about it. Thousands of truck drivers, construction crews, port workers, all tied to LNG exports. When those contracts vanish, so do their livelihoods.
This isn't just economics, it's geopolitics. Energy isn't neutral. Whoever controls supply controls leverage. For decades, America used oil as a weapon: sanctions, pricing power, influence over allies. But LNG is the new weapon, and Qatar is seizing it. Ask yourself, When Europe faces its next winter crisis, who will it turn to? Washington or Doha? When Asian economies compete for gas, who gets the upper hand? The US or Qatar? The answers are already unfolding. Europe has begun locking in Qatari contracts. China just signed its longest ever LNG deal with Doha, and Australia too is expanding capacity, determined to not let America dominate Asia. The US is being squeezed from both sides, by Qatar in the Gulf, by Australia in the Pacific, and the consequence is simple. America is no longer the guaranteed king of LNG. Here's the part nobody wants to say out loud. America's LNG industry isn't built for low prices. It's built on debt, speculation, and constant expansion. If prices fall, projects stall. If demand shifts, financing dries up. And unlike Qatar's state-backed system, American companies answer to shareholders who panic the moment profits dip. That means Qatar's surge doesn't just challenge US exports, it exposes their fragility. Suddenly, energy dominance looks like a bubble waiting to pop. So where does this leave us? On paper, the US is still huge in LNG, but the momentum is slipping. Contracts are moving east, jobs are at risk, and the very story Washington sold, that America could dominate the world through gas, is cracking apart. Because here's the real twist. This isn't only about economics. Qatar's surge is setting up a geopolitical shift that could alter alliances, redraw maps, and trap America in a position it swore it would never return to: dependent, reactive, and vulnerable. Now we'll break down exactly how that plays out, the scenarios, the risks, and the brutal question: can America fight back, or is the collapse already underway? The flood has only just begun, and America is already on the defensive. But the bigger story, what happens next?
Because this isn't just about losing market share. It's about losing leverage, losing allies, losing the ability to call the shots when energy becomes the bargaining chip of global politics. Qatar's surge drives global LNG prices down. For consumers in Asia and Europe, that looks like good news. But for the US, it's a nightmare. American LNG is expensive to produce. If prices crash below break-even levels, terminals in Texas and Louisiana can't compete. Companies cut shifts, new projects stall, jobs evaporate. And once workers leave, once investments dry up, those projects don't come back easily, which means the US could lose not just short-term profits, but long-term capacity. Energy is more than economics, it's leverage. Europe learned that lesson when Russia cut off gas. They rushed to American LNG, paying premiums just to survive the winter. Washington celebrated. But now, with Qatar offering cheaper long-term supply, Europe is quietly shifting again. Ask yourself, when the next crisis hits, who will Europe listen to, Washington or Doha? If Qatar can guarantee supply at lower prices, Europe becomes less dependent on the US, and with less dependence comes less loyalty. That means America loses a critical bargaining chip in NATO negotiations, trade disputes, even military cooperation. Asia is the real battlefield. China, India, South Korea, Japan, these nations are hungry for LNG. They're the customers who decide who dominates. And right now, they're signing decades-long contracts with Qatar, contracts that stretch into the 2050s. Think about that. By the time a child born today becomes an adult, those deals will still be in force. Meanwhile, US LNG is sold largely on the spot market, short-term, price-sensitive deals. In a buyer's market, that's a weakness. When Asian nations need reliability, they'll pick Qatar, and every contract signed in Doha is a door closing for Washington. And it's not just Qatar. Australia is stepping in too. Already a top LNG exporter, it's racing to expand. Its advantage is geography. It's closer to Asia. That means cheaper shipping, faster delivery, fewer risks.
If Asia has a choice between Australia next door or the US half a world away, who do you think they'll pick? Now, let's bring it back home. What does this mean for ordinary Americans? Jobs, wages, bills? Because if US LNG exports collapse, the ripple effects hit everywhere. Towns along the Gulf Coast that depend on LNG terminals see layoffs, trucking companies lose contracts, steel mills stop building pipelines, and investors pull money from energy stocks, wiping out retirement accounts. And then there's the consumer side.
Because lower LNG exports might sound like lower prices at home, right? Not necessarily, because energy markets are global. If US projects shut down, supply at home shrinks. That means price volatility, sudden spikes that hit families in the middle of winter. Cheap energy independence, gone. So what does Washington do? It faces a brutal choice: subsidize US LNG to keep it competitive, or let the market decide and watch jobs disappear. But subsidies mean taxpayer money. Billions. And if Americans are already angry about inflation, debt, and deficits, how do you sell them on bailing out gas giants? On the other hand, if Washington does nothing, it risks losing the very narrative it built, that America is energy dominant, self-reliant, untouchable. Losing that story means losing credibility not just abroad, but at home too. Here's what makes Qatar's move so devastating. It's not acting alone. It's aligning with long-term demand from China. It's securing deals in Europe. It's even investing in shipping fleets to control delivery. That means it doesn't just produce gas, it owns the supply chain, from wellhead to tanker to port. America, by contrast, is fragmented. Dozens of private companies, competing interests, political fights over permits and pipelines. Qatar plays as one unit. The US plays as 50 states and 1,000 lobbyists. In an energy war, unity beats fragmentation every time. Now step back. Think about the big picture.
If America loses its edge in LNG, it loses one of its most powerful tools of influence. Oil dominance is fading. Coal is dead. Renewables are rising, but they don't yet carry geopolitical weight. That leaves LNG as the crown jewel of leverage. And if Qatar takes that crown, America isn't just poorer, it's weaker. Imagine a world where Washington can't use energy as a stick or a carrot, where Europe doesn't need US protection, where Asia looks to Doha, not DC. That's not just an economic loss, that's a strategic defeat. Possible futures: the US fights back. Washington doubles down on LNG, subsidizing production, pushing for new contracts, and tying energy deals to military aid. It might work in the short term, but at enormous cost. The US diversifies. Instead of fighting Qatar, America pivots faster to renewables, nuclear, and storage technology. It sacrifices LNG dominance but bets on the next energy frontier. Risky, bold, but it could pay off. The US retreats. The worst-case scenario: America lets Qatar and Australia dominate. It scales back LNG exports, closes projects, and loses thousands of jobs. The energy dream fades into another what-could-have-been story. So where does that leave us tonight? Qatar's 40% surge is more than numbers. It's a warning shot, a challenge to the myth of US energy dominance, a reminder that in a global market, no nation is untouchable. For Americans, it means higher risks, higher bills, and lost jobs. For Washington, it means shrinking leverage and a geopolitical chessboard that looks less favorable by the day. And for the world, it means a new power dynamic, one where a tiny desert state, smaller than Connecticut, can bring the world's superpower to its knees without firing a shot. Because this is how empires fall, not always with bombs or battles, sometimes with contracts, with cargo ships, with a 40% surge that changes everything. The US once believed energy was its shield. Now, that shield has cracks. And the question that lingers is the one no one in Washington dares to ask. Has America already lost the energy war before it even began?